Hello and welcome to another episode of the Internet Capital Markets podcast. Today we've got Kieran with us from BONK Advisory, right? Hey Kieran, thanks so much for joining us.
Thanks for having me.
Yeah, and I think for someone who's not in the ecosystem, who's not in the space, when you hear the term BONK Advisory, sort of that sentence doesn't compute, right? Because it's like BONK is an unserious word, and so what is BONK? Who is it advising? What is all of this about? I think that's a good frame for us to sort of set up our conversation for the next hour or so, and we'll unpack different parts of this, right? So I'll kick us off by running through a brief introduction about meme coins and BONK. I think for most people would have heard about meme coins uh, in some way, shape, or form, where it's exactly what's on the label is what you get, right? It is the financialization of an internet meme. It is most likely purely speculative, extremely volatile. All meme coins don't have like a tangible asset backing; they're not supposed to. Right? It's just sort of gambling on an internet meme. The first meme coin was the Dogecoin. I think people would have heard about that, thanks to Elon Musk. Ironically, Dogecoin. I think if I'm not getting this wrong, Dogecoin was started out by someone who was skeptical of meme coins. Right? He built it out as a way to say that these crypto coins don't really have any meaning, and I can make one up and it's worthless. And I think what even he didn't realize is that when you publish a meme to the internet, right, it takes a life of its own, right? The same thing happened with his token when Elon pumped it for whatever reason, right? And then this entire sort of internet meme energy got captured into this asset and got reflected in its market cap, right? Since then, we've had dozens of Dogecoin clones. You have celebrity coins, which have mostly amounted to nothing, have gone to zero. You have like people try creator coins. People may know Pump Fun, which is like a meme coin launchpad where anybody can launch a coin. Right? So meme coins have taken on a life of their own. Uh, More recently, and we can add this in somewhere, but there's an SEC, which is the U.S. Equities, like regulator, has provided guidance to what a meme coin is. As we have this conversation, I think a good reminder to everyone watching that we will talk about different tokens, BONK in particular. This is not financial advice to go and buy the token. It's not trading advice. We're mostly just talking about the ecosystem, the products, the journey it's had, and the implications it has on, let's say, startups and things like that. Use it out of interest. Use this episode to learn more about BONK. This is not an invitation or suggestion to go trade it, buy it, or any of that. Right? Okay, with that, I'll quickly talk about why BONK was special, and then I'll throw it to you. Right? So, to the outsider, BONK feels like Solana's Dogecoin. Right? It's like it's another dog coin. Doesn't really have. It doesn't claim to have anything concrete backing it. It's just a fun speculative asset. On the inside, though, I think it's not an exaggeration to say that BONK, to some extent, saved the soul of Solana, right? Because it was launched at the rock bottom after the FTX crash, when the Sol token had dropped from 250 to $8 in 6 months. Sort of sentiment was at an all-time low. Solana was called the VC chain for various reasons. You then had this team that launched a coin that flipped the script on how tokens were launched, right? So the unique innovation that the BONK team did, in my view, is that they just airdropped the coin to as many people as possible, and as many people who had been productive in the Solana ecosystem. So they went around collecting wallet addresses to sort of see if you have, GitHub contributions, content contributions, and then sort of rewarded contributors, right? As a result of that, the coin started off at a relatively low price, but when liquidity came back into the ecosystem, BONK had this relevance on product, people at an ecosystem level, which then saw those holders get rewarded. So, with this context, I'll throw it to you to know what was your vantage point when BONK was playing out. Were you sort of part of the team? Were you just looking at it as a spectator? What were you thinking through the evolution of BONK right up to the point at which you decided to do the advisory firm?
Yeah, well, a great question gives me a chance to frame it. So thanks. I wasn't part of the core team. I wish I was that clever, but I saw it from the outside vantage point. I was active in Solana at the time, and I got this small airdrop. later from the Solana saga as well, which was interesting. But I ended up seeing that, being interested because it was so well received, and it was, as you said, it was contributor focused. I was thinking dev focused, but you're right, it was more contributor focused, and it was a real shot in the arm for Solana at the time. I was working for a startup that I was part of the founding team of, called NeoSwap. And if memory serves me, it was around the same time that this all happened, because we were raising while Solana was at $8, and that it was a brutal environment. But we really believed in the product, and we believed in Solana, and we managed to do this raise. But I remember BONK being a real shot in the arm. I knew a few people on the contributors team, and I was familiar with some Nom in particular from Monkey DAO, as I was a monkey holder, and I'd seen him operate there and was seriously impressive. And so BONK Advisory, we're not a core part of BONK, we're a JV with them. Right, you've seen some of the other BONK ecosystem projects they've seeded. There's things like bonk.live and BONKbot. I think it's easy to think of us in that category. So I don't profess to speak for the core team when I say this, but from the outside perspective, for me, yeah, it was a real shot in the arm. It was something that was contributor focused. It wasn't there as a pump, and let the core team dump. You speak with any of the people that I knew who've been involved with it since, and although it's taken on, I'm sure, a life of its own, I didn't see any of the original plans for it. They're still very long-term thinkers and additive thinkers. And so I think when you look at what they've done since, that was one of the reasons why we were even interested in partnering with them and approach them with the idea of BONK Advisory. And, I can get to what that is in a second. But for me, when I looked at what BONK was doing, it had kind of moved past traditional meme coin. I've been involved in the space since 2015 in some way, and seen Doge, seen Whiff. I know that was later, but you've seen all of these pump.fun, the kind of no utility, pure speculation driven coins. And what I found really interesting with BONK was what they were doing at the grassroots level, both with the airdrop, as you say, it was kind of for the working class of Solana, but also the sponsorships they were doing, the bonkathons, which were the hackathons. They're sponsoring sports teams. They were doing grants programs, which they're revamping at the moment. It was very much focused on grassroots support for Solana and Solana builders. And I think that was something that really caught my attention, because it's a fun meme and it's a fun word and we have fun with it, and it catches people's attention because particularly in the UK, right, or anyone who's been around the UK, bonk can mean a few different things, and so people go, I'm sorry, what did you say? And it kind of pulls them in, and it's a good hook. But then when you actually talk about even just bonk core, what they're doing, I've found it really impressive when I spoke with the team, and we had a bunch of different options we were looking at, but we decided to approach them with this idea for a JV. So I don't know if now's a nice time to jump into a little bit about what BONK Advisory is, but why BONK? Yeah, it was seeing their grassroots focus and the fact that you spoke with the team and you thought, these people are around for a long time and they're thinking over kind of 2, 5, 10-year plus time horizons. And I think that you've seen what they've done since with the announcement of Breakpoint last year of the ETP only speaks to that. It'd be very easy to just throw them in a bucket of meme coin, a bit silly and a bit fun. I think when you speak to these people, you quite quickly realize that's not the case, and they're going to take this as far as they can. And there's also an actual team to speak to. These core contributors are people that can help, and there's a DAO community treasury that's run. With Whiff, for example, or Doge, there isn't that doesn't exist, and so I think that's also set them up differently to be able to run with the project in a different way. So that's a bit about BONK. Maybe I'll jump into BONK Advisory now, but take it where you want.
Yeah, I think now is a good time to talk about BONK Advisory, and then we can get back to the wider BONK ecosystem quickly, because
Yeah.
you have mentioned a few things that might need some unpacking for the audience as well. But I do want to touch upon BONK Advisory first, specifically because when you were making the decision to do this kind of advisory work, right, you you had plenty of options, because you've had around a decade of work before you got into crypto, if I'm not wrong, in the real estate business. You've scaled businesses, you've raised, traditional venture, you've raised crypto venture. So you're not new to the advisory space, right? And there was something you saw about Bonk that sort of prompted you to have a conversation and decide to co-brand it and make the JV out. So yes, I would love now for you to talk a little bit about BONK Advisory, why you made, what's the first 6 to 8 months been like, and what are the different things you all do with them? Yeah.
Yeah, I mean, if I take half a step back before that, a little with my background, I think to your point, and my business partner Alex's. So yeah, I was ex commodities broker, like you say, went into real estate, was angel investing as well. I've had a weird and wonderful career. That's kind of meandered around. I then ended up in venture capital and then at family office with a completely bonkers, no pun intended, but tech entrepreneur who got me to wear a bunch of different hats I wouldn't have been able to otherwise. And at the same time, from 2015 basically onwards, I'd been investing in the crypto space and spent way too much ETH on ICOs that I'm not willing to admit. But it was a learning experience, and I ended up joining part of a founding team, as I mentioned, a team called NeoSwap with a guy who's a PhD mathematician with a postdoc in computational neuroscience called John Ennis, Dr. John Ennis. So again, I wasn't the smart person there, who'd created these incredible trade algorithms, and we were helping with that. And so I helped him with raising money and some of our early strategy. I took a step back, and one of the investors I brought in was a guy called Alex Hall, who is now my business partner. And Alex is, again, very interesting guy, very similar but different experiences. We kind of overlap. Alex had scaled his last business to 400 plus people internationally. It was a mobile services business. He had done they'd had a successful exit, $100 million, a public company, and he was kind of looking at what was next. And I met him at Breakpoint years ago, which was wonderful. We kept in touch. He ended up investing in NeoSwap, my previous business, and then we were both talking about what was next, and we'd both been doing some advisory work, and I decided at that point to take a kind of gentle step back from NeoSwap. As I loved the 0 to 1. I felt like I'd done a lot of my bit, and it was time to step back and just help. And we were discussing advisory, and we thought we're going to set up our own firm and do that because it's both what we really enjoy doing. We're good generalists on the operational and commercial side. And the thesis was there's loads of teams, particularly in crypto, that are really technically strong, but maybe need a little bit of help on that, and particularly on the early stage. And it doesn't make sense for them to have a COO or a CSO if they don't already naturally have one in their team. Equally, there's some teams we work with where they are commercially strong, but they just want someone who's done it a little bit more, and you kind of come in at this board level chairman-y type role where you sit in the background and you help in a bunch of different ways. So we decided we were going to do that. We both know Nom independently, and it kind of just came up in conversation where they, to my point earlier, they were doing so much grassroots stuff in Solana, and Solana's been very good to us, and we thought we want to work with early stage teams, and that's where we think we can help the most. And it just felt very aligned. So it was quite organic where we were going to do this anyway. We had this conversation and said, why don't we put together a proposal to do a JV like this? It feels quite aligned with what you guys are doing. And long story short, they went for it. We spent a long time collaborating with them, trying to figure out something that worked for us both commercially, but we were all fortunate and in a position where the way we could set this business up, it would work for startups and for Bonk. So the why then was, in large part, was the grassroots support that they'd put for years together, and we thought that feels very much aligned with what we're doing. I think if you've met me or Alex in person, we work hard, but we like to have fun, and life is short, and the meme is fun and it grabs people's attention, but at the same time there's a professionalism behind it that maybe belies the name sometimes. And it's not saying better, worse or other, but you look at WIF or Doge, for example, at least from my perspective, and I was in an early WIF holder, there's no one you can approach to do this, right? There's not a team, there's not even someone you can propose it to. So all of those things kind of added up to, okay, they're different, we know them, we've seen them around for a while, we've seen them operate, let's see if they're open to the conversation, which testament to them they were, and goes again back to, I think, this long-term thinking on the meme. So sorry, long story, but that's a bit about my background, Alex, why we got into this. And then BONK Advisory itself is a JV with BONK. We're a partnership with them. And we do really early stage operational and commercial support for teams. And we only do it for equity or token. Long-term alignment with teams is something that was key to us. We wanted to curate and work with, a select group kind of on a yearly basis. It's not like an accelerator in that sense. We don't have dates that are open. We just have deals with teams that we like. And as I say, we do equity or token only. And the way we come on board is this independent board level advisor, and we're multi-year partners with these guys. We want to pick teams where we like them, they like us, but often they're very technically heavy, or like I say, they do have a commercial person, but they want a bit of advice on that side. And we help with things like your go-to market. How are you positioning yourself, not just in pitches, but externally? What's the narrative you're putting together there? If you're scaling, how are you thinking about hiring and the processes that you've got with those sorts of issues? So it's a lot more on biz dev, partnerships, doors we can open there, but equally, how are you thinking about approaching these? Because sometimes you meet these people and they're brilliant, but they just haven't had that experience yet. And so we go, look, we want to be on this journey with you for 1, 2, 3+ years. You're going to need us at different moments, and we've seen a lot of these problems. We've been through them. We've raised money, we've exited, we've messed up, we've made good choices, we made bad choices, and hopefully we can help you get to those answers a lot quicker. And you see us kind of sitting in the background as this generalist layer, where if we don't know the answer, we probably know someone who does. There's plenty of doors we can open, and equally there's a lot of problems that we've experienced that we can help with. So it's quite a unique proposition. I think venture advisory is maybe a way to think about it, but it just means that we can work with really early stage teams, which is what we like, and help them amongst a wide array of problems.
I do have a question there, which is a lot of the services that you mentioned, go to market or hiring strategy or more of a generalist role, is something that a lot of other, say, boutique investment banking and business consulting firms also do provide. So do you think you differentiate in the form of the kind of ideal customer persona you cater to, or what's the differentiator for you? Do you think you're only catering to people who are building in the Solana ecosystem or in the crypto ecosystem with these problem statements, or you're open to taking it to anyone who's also building, say, a traditional business?
Yeah, so we're really focused on Web3. So you might be a Web2 business that's coming into crypto, and there's scope for us to work with you, but we've positioned ourselves as Web3 focused. So if you're pure Web2, we won't work with you, not because we don't like you, it's just not our core focus. And so, that's the space that we've operated in, again, for the best part of the last decade, right? Alex is an LP in 2 different venture funds, myself, we've done angel investments in the space, I've been a founder in the space, we've raised money in the space. That's where we put all of our time and attention. And so, yes, we've got Web2 experience, but Web3 is where we can add value the most. I think the other place where we differentiate ourselves to most of the other firms is the fact that we are doing equity or token only. As it currently stands, we're not interested in cash or cash retainers. That's not how we're set up. If that opportunity presents itself, maybe we'd look at it, but we were very deliberate with our thinking that we wanted to be aligned with these teams from the start, that we win when they win. That's the kind of venture advisory side of it, right? Is it's a sweat equity, if you will. But we're building up exposure because we like you guys and we're willing to take a bet on you with our time, and vice versa. And I think for a lot of other firms, I've worked with some, they need that cash or that cash retainer side, and that's fine. It was something that was important to us. We've been founders. We know how important equity is, or token, and we don't ask for that lightly, but equally it's kind of a good signaling tool for both sides of like, hey, we're in this for the long haul, and in the meantime, we don't get to just pull a load of cash out risk-free. Like I say, the ecosystem's been great to us, but we want to work with really cool teams and try and build up early. So I think that's quite an important differentiation point for us as well, is it's not just the services and the experience we've had with the focus, it's how we want to partner with you as a team, so that we're all aligned and it's not a we win even if you lose type of thing.
And would this be a good time to ask if if, say, quite like accelerators, you have a standard equity percentage that you take, or it varies depending on the stage of the business and the kind of assignment you do with them?
It varies, yeah, very much depending on the stage of the business, also the type of business as well. If they're a big infra play, we might be willing to look at a smaller equity or token allocation versus if they're, I don't know, a very specific vertical DAP where you go, right, this is a really interesting business, but it's not going to be a 10, $50 billion company, at least not right now. And so that changes the equation as well. So we don't have a fixed amount. We have kind of upper and lower bounds depending on what we're doing. Lower, I'd say, typically sits around 1%, and then you kind of work up from there. And then it does depend on the engagement. And we don't do project-based work, again, at least not right now. It just doesn't fit our model where we go, we want to work with you guys long term. It doesn't make sense that we just come in to help with one thing. We are the generalists that want to sit and help you as you kind of build up from 0 to 1 with a bunch of different issues you're going to have. And you're going to need us, loads this month, and then you might not for 2 months. And then you're going to need us a load for a week, and then you might not for 2 weeks. And, that flexibility in the setup works for us.
So I have one question here is that how do you compare this with just doing the VC model? Because from what I understand, you don't invest in these projects. Right? You do like sweat equity, which is I would assume that increases the bar because there's this meme, right? Like VCs add value is like a meme. But in the case where you're not bringing capital, you really have to add value to justify that sweat equity. I'm just curious, what is the thought process there? Again, because you have access to capital. Like, I would assume it's not hard for you to get LP capital if you'd like, right? So how did you think about that trade-off?
Yeah, we thought about it a lot, and I've had a bunch of different reasons I didn't want to. I didn't want to take money from LPs. I think typically, right, that can come with a narrowing mandate, which isn't a bad thing, but it does mean you're raising typically with a hook, right? We're gonna be the deep infra fund as an example, and so with both of our personalities being very strong generalists, we wanted to keep that optionality open. The other side of it for me was I didn't want to manage a fund, honestly. It wasn't something that interested me. I'd been offered it before as well. And I don't say that flippantly. It's just when you look at yourself, I think, know thyself type of thing. I was looking, going, what do I enjoy doing? I like working on a really broad range of problems with early stage businesses and helping them. And advisory work was something I've always been drawn to because of that. And so we looked at our skills, we looked at our network, we looked at what we could do, and both decided fund model wasn't what we wanted to do, especially because a lot of the time, right, without speaking for everyone, your first fund is 10 million, right? And you're immediately on to raising fund 2 as quickly as possible there. And because the model is management fees most of the time, and then the upside comes at the end. And that's not a knock on funds. I've got, like I say, we've LP'd in some. There's a lot of great fund managers around. It's just not how we worked. And so we felt we wanted to be able to work with a really broad range of businesses, and a broad range of problem sets. And so that was why we led towards this. And the sweat equity side was going, we're fortunate enough to be in a position to be able to do that, but it suits us more as well. And so it meant, to your point, both ways. We've really got to help, but equally we're probably more picky then with businesses because, say in a given year, we're going to work with 10 to 20 businesses and that's it. And so we're looking at teams that are either really interesting, really promising, the idea is really good, it's a mix of all of those, and we're willing to take a bet on them. But it meant we weren't then limited to, we're only working in the gaming vertical, we're only working in the DeFi vertical or stablecoin optimization of yields or deep in and infra, for example. It meant we could work across those, which again suits our network and how we, like I say, recognizing in ourselves these are the sorts of variations of problems we like to work on.
So I guess the next thing that comes to mind is what's the process of from the time you get introduced to a team to the time you take them on, they have signed over that equity to you. because it's a big decision both ways, like you said. So let's say you get introduced to the team, something happens in between, you get signed on, then you work with them, right? And so then I would assume, I'm curious on two things. One is that what's the evaluation or courtship period, if you call it, like for both of you, and then what are the constraints that you may have in terms of vesting schedules or terminations and things like that for cases that don't work out on either side.
Yeah, I mean, there's no set romancing period. I can't remember the term you used. It was nicer, but we've had teams where within a week or a first meeting, we've both gone, cool, we want to work together. Like, let's figure out a way. And then you have others where, I mean, there's some people I know we're working with where I've known them for years, and it just happens now that they're working on a startup, and it's like, hey, Kieran, can we have a chat? Maybe there's a way to work together. And so it's generally very organic. There's a lot of inbound or network introductions, right? It's warm introductions. We don't really do cold outreach, and that's not because we're against it. It's just A, how the business has worked out so far, and B, I think it's a lot more suited to that. We are kind of a boutique firm when we do that. So yeah, sometimes it's really quick and there's just a click and it works. Other times it takes months. A lot of the evaluation is probably very similar to VC, but with a little bit less on the, hey, we need to see that every single business we work with has $1 billion eventual, exit or valuation model. We can be a little bit more flexible than that. Because we're going so early down the stack sometimes, so, we're even at ideation stage with some of these businesses. There's a lot of looking at the team because it's cliche, but at that stage it is true. You are looking and going, hey, are these guys or gals, are they resilient? Do I think that they're going to be able to just pivot and, you hear the term cockroach, it's like as a compliment, right? Just stay alive and pivot and pivot and pivot until they think about something that works. And periodically, yes, you are just looking purely at the idea and going, this is a brilliant idea and these are the guys to execute it. So there's a kind of range of things you throw into that pot that you'll hear from all different investors that are cliche but true. You're looking at the team, the idea, do they have relevant background? Do I think these guys are gritty? And then equally, quite often the last point for us is, can we help? Because we've had teams where on both sides we've gone, really get on well, really like the idea, but we're going to say no because we don't feel good about taking equity or token from you guys because we think we're going to be of limited value. Or on the same side, they've gone, we really want you to work with us, but just only on this project basis. And we go, cool, but that's just not how we're set up. That's not how we work for a bunch of different reasons. So the last point of evaluation there really is because of how we're set up, going, can this be a fruitful long-term relationship? Because we're going to be able to add value. And like I say, it goes back to the point. We've both been founders. We've both raised money. We've both been on the other side of that table. We don't ask for equity lightly or token lightly. So neither of us are going to feel good about that setup if we go, yeah, we can kind of help with one thing, and then you're probably not going to need us for the next year and a half, but we're just going to for lack of a better term, rest invest. That's just not what we want to do. We like being in that 0 to 1 stage. So yeah, sorry, long answer, but there's no set time. There's a bunch of those different criteria we evaluate, and it still does fall very often into that venture side. And then there's, can we help with you guys, and it's a good fit.
Couple of questions here. The first is, if you were to do like a Pareto analysis or an 80-20, do you feel that 80% of the startups you work with are from a particular domain or a geography where you see a lot of concentration is happening purely based on how the system is evolving? That's one. The second, if you could tell me, how do you think of what should be the size or the skill or the capability of your team depending on how many clients you can really take? Because you're kind of just onboarding people not on project basis. Since it's long term, you never know who's going to call on to your time. So do you have a framework to say, at 10 people we can manage 50 companies, or at 20 people, what's the multiple? And what kind of skills are you really seeking out?
Yeah. First question about the Pareto analysis. It's difficult because it's really distributed, right? We have teams in Dubai, we have teams in North America, we have teams we're talking with in Asia, and then we have teams in Europe. So it's been very distributed, kind of probably reflective of the ecosystem. You would then tend to say a lot of the teams are, it's probably overweight North America, a bit of Europe and Dubai, and Asia is something that we're expanding more with, as there's just more and more teams coming out of there, and we've deliberately tried to work with both the super teams globally, and attend these events and support these events. So Aditya and I met at the Cape Town event with Solana, and the week before we'd been supporting Super Team Nigeria with we do these pro bono things with the super teams where we give office hours. So we are very much open to deal flow from everywhere, and anywhere, but it's just because, again, of how our network's been set up, I'd say that we're probably overweighted towards North America, Europe, Dubai, as it stands for now. But it just with the base of the ecosystem, we're very much more about what's the idea and what's the team, rather than what geography are they located in, because I think that's just more reflective of users. On the second side, we haven't, frankly, because we are a boutique firm, like we're small. It's predominantly Alex and I, and then we have some contributors that we can pull in. And so we've set it very much as, particularly for the first year and a half, our upper bound's 20 teams. We think we can cope with that. And the lower bound is 10. And we've done that from looking at most of what these teams need from us. So far, it does vary, but you can manage it when it's a lot of working on their narratives, and as I said, and their go-to-market strategy, or their biz dev strategy, or how are they thinking about fundraising right now, and deck reviews and pitch practice and these types of things, where you look and go, cool, we can build out time for, again, in the range of 10 to 20 teams for that. There are crunch points and bottlenecks like everything. But our goal with the firm isn't to grow it to 50 people right now. Alex had his previous business, as I mentioned, they had 400 people worldwide, and as he said, I don't think I ever want 400 people on my payroll again. The stress when you're making payroll every month with that is very different, and we're now in the position that we don't need to do that, so we try and keep it small and curated. There will be an exploration with it, where I wish I could sit here and say to you, there's this wonderful spreadsheet we built out where we know exactly we can take on X number of teams, and we do it that way, but it's not that's the kind of art versus the science side of things. We are comfortable with that range, and if we get to that upper bound and think actually there's capacity for more, we'd consider it. But we're quite curated and purposeful with how we're building this, because we're not part of a founding team, but we are very much, we kind of think of ourselves as that, right? We are here for you guys when you need, and you can pick up the phone to me, like I was last Friday at 11 p.m. speaking with a founder. And so we kind of build flexibility around that. So yeah, I wish I had like a wonderful clean answer for you there, but I don't.
Fair enough. I think what I'm hearing is that, quite like investment advisory, it's not really about the number of people, it's just about the leverage of being able to add value. Yes. Which creates enough upside for you for your time. So you just need about 2 to 5 people at best to kind of manage this at the moment, but it may grow up to say about 10, 20, 30, 40 as you go along, and let's hope there is enough for everyone to add value to.
Yeah, on that point, it's separating value from time in a sense, right? It's not the consulting model of I have X number of hours billable a week and that's my my upper bound. There's an element of between our kind of our generalist backgrounds coming in and going, cool, we can help you solve this problem in 5 minutes or an hour because we've been there or we've done it, or we can ask the right questions. And there's a kind of an infinite upside to that, right? It's the same. There's certain people in certain roles where people go, how are they making that much money as an engineer or whatever, but it's their expertise is separate from their time, and their value is separate from their time. And we think about it very much in that way. We're long-term partners, but we can help come in and solve problems very quickly, or help get the right people in to solve those. And so it's not, hey, we're going to bill you $3,000 an hour for our time. That's not how we think about it.
Okay, I think to take us forward, I think it would be good to switch into some of the projects that you are working with right now, what those projects are up to, in what capacity are you helping them out. I think it'll make it a little more real for the listeners as well. So I know you mentioned a few when we were talking about it before our calls. You've got DeFi Carrot, and people are going to love these names. Right? So you've got DeFi Carrot, you've got Golfin, which is like a crypto golf app. There's many others. So I sort of throw it open to you to highlight a few of these. What are the kind of projects you're working with? What are they doing? And then what are you doing for them over the last 6 to 8 months that you've been doing this?
Yeah, awesome. I mean, I'll mention a few. I won't do an exhaustive list of clients, although it's not like it's 50 people, but just a couple we're working with in Solana, Eigenlayer, Monad. We're particularly Solana heavy, unsurprisingly, but we do work across different ecosystems. You mentioned that we've got DeFi Carrot, we've got Golfin, we've got Haha app or Haha Wallet, which is on Monad. There's WeRate is a team we're just starting to work with. There's a couple others I can't mention right now, and some more I could in the future. But they span quite a diverse mix, again, as we touched on. So the way we work with these businesses is really varied, which is part of the fun. And it goes everything from looking at their current go-to-market strategy and their 2 to 5 year roadmap and how they're thinking about these things, to if they're raising, we're looking at how are they putting together their current narrative for investors and how that differs from their consumer-facing narratives, because a lot of people make the mistake of thinking they should be the same thing. If teams are hiring, we're looking at how are they thinking about hiring and their culture, and there's this kind of rule of thumb that every time your team doubles in size, everything starts to break. And Alex talks about that a lot, and that's true. And we've, had experience in with building international and distributed teams in different offices. We joke as well, because we do this with the booth, but there's an element of kind of founder therapy, because we've been there and we've done it. And when times are really hard, we want to be a really trusted partner so founders can come to us and go, I'm really struggling with X, Y, or Z. And that might be in their own personal capacity, or it might be with the business itself, and we can help coach them through those times and say, hey, I've been there, it's really difficult, how you thought about this. It's managing their burn rate, managing their teams, and interpersonal issues as well. So another example maybe to finish on, and it kind of falls under go to market, but is looking at how are they approaching biz dev and partnerships, because BD in crypto in particular, I think justifiably has a pretty bad reputation, because for a lot of people it's just spamming cold DMs or going, hey, let's partner, with kind of no thought beyond that. And so it's looking at how are these teams looking at building deep and meaningful relationships with other partners, whether they're Web 2 or Web 3 focused, and thinking about how are you building biz dev and partnerships beyond just cold DM, and kind of these spam things a lot of people do help. So yeah, we work on a range of different issues there. I'm going to stop, because otherwise I think I could just kind of talk myself in circles and with it.
I guess one question, which is not so nice but could happen, is that since you're doing sweat equity, these teams are committing to an equity token commitment upfront, and it's been only 8 months, so it may not have happened yet. But there could be a situation where a founder turns around and says, you know what, I don't think you added enough value. I don't think this justified the equity, and I want to claw it back or some of that. Like, uh, obviously, I don't know if it's happened. If you can speak to cases where, like, what happens when the relationship sours or exit or something. Like, have you like thought about these things? Do you have any experience with how you'd handle these?
Yeah. I mean, touch wood, it hasn't happened yet, but it's definitely something we think about, have thought about, and put in the structure of our agreements, because again, as I mentioned, we've been founders, we've been on the other side of the table, and vice versa, and it's important to us. It's not just here's a lump sum upfront of equity or token. That's deliberately why we didn't structure agreements like that. So we have vesting, and vesting changes depending on the particular agreement, the company, the length of the engagement, etc. But one of the reasons for that is because we're saying to people, hey, if we're asking for equity or token We don't want to just be able to have it and we bugger off and don't do anything after 2 months, 3 months, whatever. So we haven't had that experience yet, but if it happens, it will happen. I think we do work very hard to have good relationships with our teams, and that's a big part of why we pick teams that we work with. Is there is a mutual trust there, and that there's going to be ebbs and flows in how much you need us and vice versa. But we have these vesting schedules set up. So if halfway through, even from our side, we think actually, guys, we've done all we can do, and we don't need to see the rest of this out. We can shake hands and leave, and it means that just as a use around numbers as an example, there's 1%. Maybe that's 2/3 vested, and it's 66%, 0.66% is what we leave with as an example. Now, we want to avoid those situations if we can, but that's just a reality of working with different people and making everyone feel comfortable about these arrangements. Is that it's not, hey, all of the risk is assumed by you guys. You have to give everything to us up front, and we don't have to deliver on anything. It's again much more codified into how we set up these arrangements from the start. Is we're going to be here long term with you guys. That's why we do this vesting. We're going to win when you win, and we're going to add value in a bunch of different ways. And there might be a number of different reasons why we don't see that full vesting out as employees do, right? Sometimes you leave after 3 years rather than 4 because you're like, I've done everything I can, I loved it, but my time here is at an end. Generally speaking, that's not going to be the case, but it just gives everyone a sensible, comfortable out if you get to that point where you go, hey guys, it's just not quite working on either side. Cool, we can shake hands and leave, all on good terms, and you're not locked into this kind of handcuff deal where there's no way to get out of it. And that was very, very important to us from the start. I think that also helps with these relationships though, because there's the pressure is a little bit different then, because everyone knows that there are options and you're not here because you have to be here.
I do have a question, which is kind of like an aside. So whenever you do consulting for, say, these crypto companies, I've heard of terms like how instead of setting up like a C corp, you would set up like a DAO. Instead of doing like a legit paper contract, you would set up like a smart contract, where automatically, based on the conditions that you've predefined, equity could get vested, allocated. I'm just curious as a layman to understand, do you guys actively like build businesses on the DAO and execute your contracts in the form of smart contracts? Or is it still traditional in the way of putting wet signatures or using something like a DocuSign to do this?
Yeah. I mean, we're still mostly in the wet signatures, to use your term there, world. We use things like Streamflow for vesting, for example, and they're a great platform. And so that's smart contract based with you can have 2-week, monthly, whatever you want to set up as vesting or streaming for payments or token. And again, that depends on the company or the business, but a lot of the time, depending on when you engage with them, it's not possible to just solely do this stuff on chain yet, because we might be engaging with businesses that are at the ideation stage, and so it's more around signatures and traditional documentation, and then as and when you get to the stage of actual vesting, then you can use some of these smart contract platforms to do that, and we're totally open to it. It just depends on the setup and the structure. We've not worked with businesses where they're actively only managed by a DAO, as an example, so I can't speak to that. It would be more difficult, frankly speaking. I think we're not opposed to it, but DAOs are tricky and messy. I think there's always work going on with them, and not all DAOs or structures are created equal, right? Is there 1,000 members voting on everything, or is there 10? There's experiments coming along with Futarchy, right? As you've seen with Meta DAO and even like Mountain DAO, and how they've raised capital recently, the last month or two. That would be much more on a case-by-case basis. I'm not opposed to it. So yeah, we've used some things like Streamflow as an example, but the rest of it is much more boring and traditional in a sense, because at the end of the day, you're still just dealing with real-world businesses and contracts.
I think Kieran is being generous. I don't think there is a single functional DAO anywhere in the world today, which is fully automated, which has smart contracts doing these conditions. I just don't think that exists today. Yeah, it's mostly dysfunctional voting, voter apathy, treasury wars, and this is across all ecosystems. So, including on Solana, I don't think there is a single functioning DAO. I do think, like you said, the efforts with Futarchy are great, and we'll see how they pan out on voting markets and things like that. But as of now, I don't think that's a thing. Yeah.
I have a question for the both of you. Do you think the way, like, so as a third person, what I see is no matter which subject we touch upon, it's almost like it turns out in the end, it's so evolving that even the experts who are on it are saying it's changing so rapidly, like, no one has a full grasp on what's really happening. So, what is it that keeps you building in this ecosystem? Is it some kind of a hope or a belief that someday this is going to develop into something so tangible that it will legit have like a framework and an answer, and it will start working? And right now we're all, maybe a couple of million people in the world are just working towards this one idea, which may or may not happen. Or in what timelines do you think, in the next 5 years, 4 years, where you think we will see a lot of active DAOs, we will see like people who are building consulting practices in crypto will be executing smart contracts and will say, listen, we don't do traditional signatures, and it's not because it's not legit in a court of law, it's just because you need to be into the ecosystem to really build it. I'm just thinking, do you guys have like independent views on this?
Yeah, I think it's like there's so many things happening in an ecosystem, and some of them work and some don't, right? So I would say that like you could have crypto succeed and impact the world positively even if DAOs entirely failed, simply because the unlock of being able to transfer ownership assets to people, even if without smart contracts, even if with humans involved with wet signatures, is still a big unlock, right? One of the examples that we share internally is that platforms like any of the ride sharing platforms like Uber, Ola, Zomato, whichever, even if they want to give equity to their delivery partners and ride partners, the traditional structure is so difficult that they just can't do it, right? And so if you can do that using tokens and using public blockchains, even if you still require the CEO's signature and the board signature, it's still a huge unlock. So from my perspective, I think what excites me is that there's so many different experiments, all of which have the potential to impact the world positively. Many will fail, some will succeed, like with anything, and that still means that we're all better off.
Yeah, I agree. I actually completely agree with everything you said there. And I also think, with the way I add to it, is I think if you're a certain type of personality, you're just drawn to the kind of fringe early stages of adoption or of technology. And that's something I kind of recognized in myself years ago. And you're taking directional bets as well as individual specific bets. It's still a directional trend bet. And I think when you step back and you look, you go, the world's becoming increasingly digital. The idea of digital ownership, of digital scarcity, of digital assets is something that's becoming increasingly unalien to people, especially younger generations. And then you look at the combination of things. Again, you can throw them out there as buzzwords, but AI, the use of LLMs, I think we're probably all of a similar opinion that this stuff's only going to increase and get better. I'm not going to sit here and say it's a panacea for everything, but I use it daily and I really enjoy it. And I look at image creation, I look at digital signatures and authenticity in a world that anything that's online is becoming increasingly suspect as to whether it's real or not. All of these sorts of trends make me go, yeah, this is a space I want to spend time in. And I want to be around these young, hungry, smart, clever people that are building things, ideas that I couldn't come up with, but there are different ways that I can help them that maybe they couldn't do on their own. And as a directional trend and a bet, I'm very comfortable with, if we're here right now, I think that most of these trends are only going to continue. We said digital assets, digital ownership, digital scarcity. Same thing with certification and authenticity in a world where everything's increasingly digital. Most of these blockchain technology and cryptographic signing, I think, are going to be important the same way as there's a lot of other, whether it's capital coordination or ownership of real world assets and interoperability. is important. Just one closing thought on that. I was listening to a pod last night, and they were talking about Meta, and I think it was the FTC case that they were kind of hoping was going to get dropped, and all this talk about monopolies and competition, and there was talk about Meta having to divest, some companies, and Instagram being one of them. And I put a tweet out about this, but I'm like, it would be way more interesting to me if it was the social graph itself that they made portable rather than you had to divest the company, because there's more competition then at the product layer. And Aditya, I think you replied to my tweet about this and productizing the APIs, but digital ownership just seems to be a trend, and like I would like that. Even Twitter, I've got 4,000 followers on Twitter, and they're really high quality, but it's the reason I didn't go to Farcaster. Go ahead. So, yeah.
Just to break that down for the audience as well, right? What Kieran is referring to is that if you're like, for example, Sarthak, you have a very big Instagram channel, right? But you don't really own your audience beyond the access that Instagram gives you. So what he's saying is that instead of, and even like governments are helpless here, because like, what do you do? Like, they don't have a framework for what they can say beyond, we'll break the company, because the government understands the company, the legal entity, not like the technical product, right? Versus if you, in theory, again, this is not a bet that has played out in reality yet, but in theory, you could say that, you know what, you have to give people the right to exit with their data, with their social graph in a way that's effective. So if you decouple Instagram, the social network, from Instagram, the app, right, wherein you can take your followers and your content to any UI that you want. That is something that a blockchain like Solana or any of the other high performant layer 1, layer 2 blockchains could enable. It's one of those bets that is being tested out. For example, like he said, Farcaster is a great example. I think they're now seeing good scale, where they're trying to build a decentralized social network where you own your audience and your content, right? Sorry, but I just wanted to give that context. And so you go on, Kieran.
To wrap on that point, like the challenge is, like on Twitter, for example, I don't have a huge following, but I would say I have a very high quality following, but both of people I follow and some who follow me. And I do feel like Twitter as a platform in general has got a bit more buggy and slightly worse for me as a user. It's not diabolical, but there's lots I still like, there's lots I don't like. It would be nice to have the option of going, cool, I really like, I don't know, Grok on Twitter, and that makes my life easier, but I would prefer to port my social graph to a different platform where I can curate my feed a little better than I can currently. And I can't do that right now. And so, again, on just the digital ownership and the general trend of that you touched on Farcaster, all of those types of bets are why I look and go, I really like working in this early stage space. And you're not only tied to finance in crypto, right? You're looking at the way AI is starting to operate with it more, and you go, cool, I'm gonna be able to operate at the intersection of more interesting trends over the next 5 to 10 years, and that is interesting to me.
In fact, from a directional perspective, I was a couple of weeks ago speaking with a friend who was very traditional in his investing approach, and I said, have you dabbled with crypto yet? And he said, absolutely. And that kind of shocked me a little, because I wouldn't expect him to. And I said, okay, if I had to start, what would you recommend I should aim to, or how have you designed your crypto portfolio? And he said, I believe that by 2030, one Bitcoin should be equal to 10 Ethereum, should be equal to 100 Solana, and all of them would be equal to $1 million each. And he's like, that's what I think of it directionally. And if it can get to that, which I believe it can, that'll be a bet that plays out really well for me. Do you guys, when you kind of try to contextualize it for, say, Kieran, as you mentioned, your sister, would something like this give them a lot more context to really where the money is going, or how big you expect it to be? Or would you change these numbers? Do you have a different value in your mind?
Yeah, I rarely give values just because I think it's so hard to do it accurately. And equally, I think the problem when you're speaking with people that don't operate in the space or aren't investors is they will anchor to that number. And whether you tell them to or not, that's what they will anchor to, right? Is oh, well, you said it's going to be worth X, so I'm going to try and buy Y amount of that, versus trying to give them tangible real world benefits. So as an example, I might say to a friend or a family member is, instead of that, I'm going, let me help you set up a wallet, and then I'm gonna get you, you've got $10,000 in savings as an example. Cool. Well, we're gonna start with $1,000, and I'm gonna get you to stick that in Carrot in your wallet and just leave it there. And they check after a week and they go, oh, it's gone up by $10, and then by 20, and then by 50, and it's compounding. And get them to think of that as just another savings pot, and a very nice, easy, automated savings pot, and something that there's going to be more utility built on in the future. Like, I would love Carrot to be able to be collateral in places as well, where you can then borrow against that in stables, but then you're able to, in the meantime, it's just ticking over and accruing interest in the background. So there's kind of like a self-repaying loan element to it. And then you're able to take that to somewhere like Quartz, which are some guys, working on a kind of on-chain credit card. Shout out to them. But you're able to then deposit on there in Sol, Sol, USDC, whatever, and I could put $1,000 of Sol or Carrot on there, and my credit limit on that is up to 80%. And then they manage that position for me, but I don't have to sell my crypto. And so I think I start more with them using stuff like that. But there's all these different really simple ways you can use it. I say simple for me as a user, but I can show you as a friend or a family member some tangible benefit to it, versus going, I don't know, buy X and I think it's going to be worth $1 million in 5 years.
Yeah, I'd jump in here quickly and say that I would take it one step further and say I'd never tell people to invest in crypto at all, because Sarthak, like Sarthak he's an investment banker, CA, is like a trained investor. He does this for a living, and so it's a very different conversation versus, people are like that, because the context in which this question is inevitably asked is that people feel like they've missed one wave and they want to catch the next, right? You feel like you missed the Bitcoin wave or the Ethereum wave or the Solana wave or whichever token has already gone too high, and you want to catch the next one. I think buying crypto is actually, again, one of the more boring ways to get exposure. If you're like, imagine there's an industry where you have infinite access to capital assets, where you can convert your skill and your labor into equity ownership into something that can become big. Why wouldn't you go and do that, right? Because, like, let's say if you're brilliant at AI or you're brilliant at EV engineering and you're in India as of today, there's very limited private companies you can get exposure to. You have to go take a job at one of 3 or 4 companies, or you have to get a visa, move to the US and get a job at a few other companies there. Whereas if you work in like the crypto ecosystem, you can deploy that skill or that talent and earn sort of capital assets all over the world, right? And this is not my original thesis. This is how Super Team was created, and the thesis through that I was exposed to, which is earn, don't buy your first crypto, right? So my advice to everyone is, don't go and buy crypto. It inevitably will crash at some point, and you will sell the bottom, because you're not that good of a trader or investor as you think you are. Instead, go find a project. Any of the projects mentioned, go find the project, see how you can contribute, and sort of build up your skill, your proof of work, and your portfolio that way. So one of the things that we try and do is give something actionable to the audience at the end, right? And in cases where it's a company or a project, we just ask if they have open roles or if they're looking to launch. I know in this case it's a bit different because your product, the offering of BONK Advisory, is focused towards startups. And I've already introduced you to a few Super Team India startups that I think you're already talking to. But I guess if there's someone who's listening who is trying to build out a company in the space, what's the best way for them to reach out to you or work with you, if they want to? Yeah.
Yeah, a great question. I mean, if they're in contact with you through Super Team, then obviously I think you're a great route. Twitter is the next best place. My Twitter is what's all this with 2 S's at the end. WHATS, cool. And then same, we've got BONK Advisory, and it's just BONK Advisory on Twitter. So reaching out there or through you guys is the best, because obviously our DMs get quite extreme, and I don't know how people manage it, honestly, and people who are far busier than I am with even more inbound. But they're the best places to start, and feel free to just tag us in a message, DM us, or reach out through yourself, and happy to have a chat. We're going to be trying to help remotely with Ignition, which I know you're a part of, in Super Team Singapore as well, because sadly we can't get out there. But through any of the super teams is a great way to get in contact with us, or just through Twitter. And I'm happy. I will always try and get to every DM. It's hard, but I reply to as many as I can. And always happy to just have an open-ended chat with anyone about any problem they're working on. You don't have to be an immediate or at all like a clear client. We're here to do a lot of grassroots work as well as work with active teams.